So this is the wrap-up for the live market open for Wednesday, January 20th. Extremely busy markets, and we're back to the gloomy atmosphere. Yesterday we had a big dovish move from the Bank of England's Mark Carney. Said it's not the time to raise the rates. We're worried about inflation in the UK, China, the Eurozone, you name it. And they'll need to see more sustained growth, a rise in CPI. The bar is high for raising rates. That's for sure. That sent the pound tumbling down, and it also had reverberations in other places. Eurozone figures were a bit better than expected, but the euro moves more on safe haven flows and fears of the ECB decision tomorrow. New Zealand dollar was hit hard by a double whammy. The New Zealand milk prices, the global trade index fell by 1.4%, and more importantly, CPI plunged 0.5. This quarterly release implies perhaps another rate cut from New Zealand. We had oil resuming its falls, nearly making it back to 30, but then resuming its falls. Asian stock markets basically collapsing. The Nikkei is back to a bear market. So all this doom and gloom, how is it reflected on the charts? The big winner is, of course, the Japanese yen, falling to levels last seen many months ago, 116.24, almost reached 116. And this could be a source of worry for the Bank of Japan that the yen is a bit too strong, not only against the US dollar, but against the Chinese yuan, and basically everybody, maybe less strong against the euro. The euro safe haven is working. This trade is working. The euro is stronger against the dollar, and of course much stronger against other currencies, but not as much as you would expect. Ranges are limited because of fear that the ECB could join the currency wars. 110, 110.70 on the upside, 109, 108 on the downside. Here is the beaten pound looking towards the lows. The biggest fall came yesterday. We had a rise on inflation, and then boom came Carney. 141.33 is the low for the day. I see support only 140. We're back to levels last seen when the Bank of England last moved in 2009. Okay, nearly 7 years ago. Big event today in the United Kingdom. The inflation figures, the jobs report, and the most important thing in the jobs report is wages. Wages are expected to fall to around 2% from 2.4%, and of course also jobless claims and an unemployment rate should be watched. Another big morning for the British pound in its weakness. Then we have inflation data from the United States. Watch core CPI year over year. This is still looking good, around 2%, expected to rise. Also, headline inflation is expected to rise because of the removal of base effects. Housing data is published at the same time, but will probably be ignored because of inflation. If we have disappointing inflation numbers, that could lower expectations for rate hike and push the dollar lower. The Fed has more emphasis on inflation, making it even more important today. Okay, and then we have Canada Day, if you wish. The rate decision in Canada. Canadian dollar just losing more ground by the minute, 146.73 at the highs, not stopping its rises during our show. The consensus currently is not extremely clear, but the Bank of Canada is expected to cut the interest rate from 0.5 to 0.25. And remember that the lower bound for them is minus 0.50. It's supposed to help the economy. On the other hand, they already have some support for the economy from the weaker Canadian dollar. Okay, so they might opt not to cut, but to keep the pressure on the Canadian dollar by releasing a dovish statement, following the footsteps of the former governor of the Bank of Canada, Mark Carney, that is now the governor of the Bank of England. Okay, so we might have a move over there. If we don't have a cut, it could be, of course, positive for the Canadian dollar, allowing dollar CAD to fall because it's a bit overstretched. All right, so big day for Canada. It's not only the Canada releases a report, the rate decision, and then a press conference by the governor. So we'll have, and also we have other figures in Canada beforehand that will probably be ignored. Manufacturing sales. More important for Canada is what comes out of the US, the crude oil inventories. They'll just get into the mix. They're released between the rate decision in Canada, between the rate decision and the press conference. So this hour between 3 GMT and I would say up to about 5 GMT until the press conference ends should be extremely, extremely exciting for the Canadian dollar. I know I'm talking more about the Canadian dollar than perhaps you want to hear, but I think also technically this pair is quite interesting. Aussie dollar, back to the low, 68.50, gloom and doom, 68.30, line to watch. 69 is back to resistance, but not so strong. The trend also here is clear, and Kiwi dollar is not looking so good because of the weak data. 63.60 current levels, 63.10 and 62.50 are support. 64 is resistance. All right, so I guess that's it for today. Let's see if we have